Hey guys, if you watched my last update on the state of the cryptos, you'll be aware that we were expecting a consolidation, a fourth wave, but that we have pulled back pretty strongly, and the probability of a lower low had diminished quite a bit with the strength of the rally that we'd been seeing. But we've had the exact kind of spike low that we were looking for that would make it more of a likely outcome. So I've put that back on the chart in the short term, and Chainlink is not the only crypto we're seeing this. We're seeing the same behavior across most of the cryptos. Chainlink does have one of the deeper pullbacks so far. Now, it doesn't mean that our bullish pattern is dead, but that it's diminished a little bit in probability. So our bullish pattern is represented by this orange-yellow nomenclature in which we have a 1, 2, 3 up so far, 3 waves, clearly 3 waves, no other way to count it. And our fourth wave has pulled back well below our standard level for an impulse. So the idea of this being an impulse is dead because you can't have your fourth wave retrace and overlap the peak of your first wave. So that doesn't mean it's all doom and gloom, because we could still get that higher high and get our fifth wave. So at best, this will count as a leading diagonal, possibly for fourth wave. And we're seeing similar in the equity space, in the Dow, in the S&P, even the Russell 2000, in which we have what looks like 3 up, and we've had a much deeper than expected retrace for a fourth wave. And so wherever the equities have been going, the inflection points have been lining up. Now, with this depth of this retrace, typically before a big correction happens, you want to see a very sharp retrace that breaks support and would have an impulsive pattern. And we kind of have that. In other cryptos, it's a bit more obvious and a little stronger. You could easily count this as a 1, 2, 3 sideways fourth wave consolidation and a fifth wave down. There's even a bit of an MACD divergence, almost a divergence, not quite, in which you have a bit of a double bottom here in the MACD. So that's enough to convince me that this possibly could be an impulse down. The other interpretation is that it's actually an A, B, and a very extended C wave down for fourth wave, which is not unprecedented. Diagonals are ugly. They don't always have standard subwaves within. While this looked like 5 up, you could easily count this as 3 up. It's corrective. It's a little bit non-standard in proportions. And this rally here, variety of ways to count it. You could count this as an A, B, C up. It could be a 1, 2, 3, 4, 5, although there's no meaningful fourth wave here. Now, the bearish setup, well, actually, before I go to that, if we want to save our bullish setup, if we want to preserve the upside that we have, we're going to have to turn around real quick. And we're seeing a bit of a bounce across the cryptos today. We're going to have to see this thing get up to the 1950 mark at least, and preferably up to $20. We'd like to see a bit of a throw over, and that would be more convincing that this is actually 5 up in a diagonal fashion. If that happens, I would expect to see a very sharp pullback, because after a diagonal, you typically see a sharp change in direction. And the other thing is, just because you have 5 up in a diagonal does not guarantee that you're going to have a continuation. So that's why diagonals are risky, because they can be confused with corrective waves, as we see here. Even if we get that higher high, one could argue that we actually have an A and a B and a C wave up. So that's why it may be prudent to take some profits, some chips off the table if we get that higher high, if we get it. Now, the more immediate bearish setup is this red setup, in which this is 3 up, and we have a first wave down already for a larger, presumably a fifth wave to complete our larger C wave, which we're going to look at on the big picture chart in just a second. I would fully expect us to get a gentleman's exit. In other words, a wave 2, and that will typically retrace 38.2 to 61.8% of the first wave down. However, because it's a corrective wave, sometimes, and actually quite frequently, you'll have a very sharp retrace. We could have 76.4. We could retrace almost the entire thing. Now, the only way this red pattern invalidates is that we break this high that we hit on April 3rd of around 1833. If we break that, this downside setup is dead. Doesn't mean there isn't still a larger downside setup that may be in play, but the immediate setup would be dead. If we do follow through, we would bounce. And if we fail to break through this box, if we fail to break that high, expect a very sharp pullback that would immediately break support. So our support is at 1143. That is the point at which our yellow bullish pattern is basically dead. It means we're very likely going to get that lower low. And based on the Fibonacci's, and assuming we get a 61.8% retrace for wave 2, we're projecting down to about anywhere from the $10 to the $8 range just for the third wave. And because corrective waves are they're variable in nature, you don't always have a clear fourth wave. We may actually have a truncated finish. A lot of things going on here. We could go as low as $8 to the upper $6 range. Now, shifting to the big picture, you're going to see that there's some alignment in that. This hasn't changed at all, and this is available in the description below, so check it out. There should be a link there. But when we look at this, our purple box falls right in that range. That is between about 969 with the lower bound sitting around the upper $5 range. I wouldn't expect us to go that low. There are plenty of confluences that are suggesting we'll fall in that box. And again, with this latest pullback, that probability has risen quite a bit. When you look at this rally so far, it does look very much like an ABC corrective wave, possibly a fourth wave because it's been so time consuming. Our original low was on February 24th. We're almost 2 months out from that. So 2 months sounds about right for a fourth wave. And when we look at the bigger picture, you could reasonably count this as possibly a 1, 2, maybe a 3, 4, and a fifth wave to come. You can also see the internal structures or ABCs as well, 3-wave patterns within. So everything does fit. And again, this pattern, while still not primary, has become much more likely with the latest developments. So in the meantime, green is still primary, which does call for us having well, the lowest low behind us. I would fully expect us to get at least a fifth wave up. Now, there is a small chance that we're going to have a larger diagonal pattern to lead us out. So what that means is that the top of this high here, that could be a first wave. It's an ABC up. We're in a second wave, and the rest of our waves upward would manifest in 3-wave form, in zigzags. So there is a possibility that that could happen, especially if we tear straight up from here. Let me actually demonstrate. If we take a Fibonacci extension of what we have so far, assuming that this is the top of a first wave in a larger leading diagonal pattern, I'd fully expect our third wave to get us to well past $20. I would like to see us get to $22 plus, $22, $23. If we see a very powerful move that unfolds in a zigzag pattern, maybe something that's very ambiguous, something that looks like this here, that could indicate that we're just completing a much larger diagonal. And actually, before I delete that, that diagonal would eventually top around the $24 to $25 range, maybe $26. And that's somewhat aligns what we're seeing on the big picture. It does fall a little bit lower than where our ideal first wave would be, but it would be better than nothing. And sometimes you make up the rally towards the end. Now with Chainlink, we don't have as much history, and we don't have a history of late blowoffs like we do in a lot of other cryptos, such as EOS or Stellar Lumens or even Ethereum Classic. So I would expect us to have pretty regular rallies and pullbacks, not too many deep pullbacks. That's not how Chainlink has rallied thus far. So again, no reason to panic sell, but start thinking about your strategy. If you're planning to hold through a larger correction, then commit to it, stick to it. I wouldn't expect this correction to be too long lasting, but everything is relative. It could be a 1 or 2 month correction, and you may have a chance to buy at a lower price later on. Personally, I will look for this possibility. There's a chance I take some profit on a high right within this box. The other probability is that I'll wait for us to break the low that we've had so far. If we get that bounce, if we break that lower low, that might be my impetus to exit. I haven't totally figured out my strategy yet. There's also the possibility I will hedge using BITO put options. So that is the Bitcoin ETF. I'll have a separate video series for that. I've already had one out there. So subscribe. That way you don't miss any updates. And if you've enjoyed my video, don't forget to give me a like. Lots more content to come your way. So until next time, thank you for watching and happy trading.